Interest on drawings is going to be discussed here. We have assumed here 5 partners A, B, C, D and E, where the partner A draws rupees 2000 monthly drawings. Okay, 2000 draw at every month beginning or at the beginning of every month. B draws rupees 2000 at the end of every month, and C draws rupees 2000 at the middle of every month. D draws 5000 beginning of every quarter, and E draws rupees 5000 at the end of every quarter. Rate of interest on drawings 12% per annum is given here. Let me first finish off the interest on drawings calculation for the D and E, and then I will get back to A, B, C. Let's start with D. For D, the year being 2019 and 20, beginning of every quarter, usually the year starts with 1st April, financial year starts with 1st April and ends on 31st March 2020. The first quarter is this one, okay, 4, 5, 6th month, 7th, 8th and 9th month is the second quarter. So D draws this way, he draws first installment in 1/4/2019, second installment in 1/7/19, third installment on 1/10/19, fourth installment in 1/1/20. This is how he draws. Quarterly once he withdraws how much? 5,000 rupees. 5,000 rupees. Drawings. Date and drawings. Partner D. Okay. Date of drawing as well as the amount of drawing. Right? Clear? And we have to calculate interest for his drawings. 1/1/20. The year ends on 31st March 20. Right. From the date of drawings to the year end, you have to calculate interest for each and every item. This is the second drawing, this is the third drawing, this is the fourth drawing. From this date to this date, the number of months meant for interest calculation for the first drawing is 12 months. And the next one from here to here, 1/7 to 31st March, it will be 9 months, and then it is 6 months, it is 3 months. I am going to follow the product method. Already I explained the product method in the case of interest on capital calculations. Go and refer that lecture. Now I am going to do the product here. So product is nothing but multiplication of drawings into number of months it's meant for. 5,000 into 12, 60,000. 5,000 into 9, 45,000. 5,000 into 6, 30,000. 5,000 into 3, 15,000. Summation of the product. Okay, summation of product 1,50,000. We got this value. Under product method, sum of product, multiplied with the rate of interest. I name this as I, the notation for the rate of interest being I, into, as we have converted everything into the month, we have to calculate the interest for a month only. So to convert this to a month into 1/12 will be used. Already I told you, you can convert that to days also. If you are converting this to the days, 365 days, like, you have to calculate the product value into rate of interest per annum into 1/365. You have to apply this. This is applicable for the banking companies. Okay, for the amount you deposit, withdraw now and then in savings bank and current account, how they will calculate the interest? Very simple. The way of calculating the interest is, this is the process, product method. Right. Sum of the product being 1,50,000 multiplied with the rate of interest here 12% per annum. So 12% per annum into, everything is converted into month basis. So I have to multiply with 1/12. Okay. So the value here being 1,500. This is the way you can calculate, or you can calculate interest for each and every period separately also applicable, but I used the product method. If you want to do direct method, for 5,000 for the 12 months, the rate of interest being 12%. Okay, 12%, the value will be 600, and here 45,000 multiplied with the 12% for how many months? how many months? Only 9 months. So into 9 by 12 into 9 by 12, the value will be, so 450 into 9 will be the value, right? 450 into 9, 4050. Okay, sorry. Okay, this is 5000, right? This is 5000, sorry. The original value is 5000 here. So first case is 600, the second case is 5000 into 12% into 9 months only. 9 months. So 450 is the answer. Then the next one is 5000 into 12% for 6 months only. So into 6 by 12, 300. Then finally 5000 into 12% into 3 months only. So 3 by 12. These two cancel. So 150. 1500 is the answer. I hope so you could understand. 1500 is the answer. We got it here. 1500 is the answer. Clear? You can either work out this way or that way. That's a direct method. This is a product method. I depend on the product method for the entire workings in this illustration. So partner D is over. Let me go for the partner E. For the partner E also I am going to work out under product method itself. So partner E case, partner E, date of drawing and amount of drawing and number of months meant for, and do the product. So the date of drawings is 1/4/19, sorry, not 1/4, every quarter end, the first quarter ends on 36, so 36/19 is the first quarter end, and second quarter is 39/19, and then the third quarter is 31st December 19, the last quarter is 31st March 20. So 3 quarters, right? So 4 quarters. Amount being the same, 5000, 5000, 5000 and 5000. Year end is 31st March 20. For the first case, from this date to this date, 36/19, leave that date, leave that month, because we have to calculate from July only. This is the last day of the month, will not carry any interest. Like, so from July to 31st March, we have 9 months here, and the next case we have 6 months, and here we have 3 months. The last case, of course, it will not carry any interest, so 0 month. The product here is 5000 into 9, 45,000, and here 5000 into 6, 30,000 rupees, and 5000 into 3, 15,000, last dash. So the overall value is 90,000 rupees. Now for the product, I am using the same formula, 90,000 into rate of interest being 12%. Don't forget to multiply this with 1 by 12, because under product method we have converted that into the month basis. So interest should be calculated per month basis. Of course, you can convert that to the day basis also, already told you. So I am cancelling this. The final answer is 900. Okay, 900 is the final answer. Of course, you can use the direct method also to get the answer. So now we have calculated for D and E. For D, the final answer is 1500. For E, the final answer is 900. So we got the answers. Now I am going to calculate for A's case. So in the case of A, he draws rupees 2000 every month beginning. So rather than every quarter beginning, he draws every month beginning. So we are repeating the same process, the how we calculated for D in the case of A2. Right, so A draws 2000 every month beginning. So drawings amount, I am going to calculate for A, rupees. How much it draws? 2000 every month beginning. April 2000, May 2000, June, July, August, then September, October, November, December, January, February and March. Now number of months, the interest eligibility. For the first one, from this date to this date, interest will be leviable, so which is 12 months, and the later, 1 month later means we have to pay the interest for the 11th month, and such a way each and every month's drawing will carry 1 month lesser interest. So 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. I am going to do the product method, so it's nothing but multiplying these two, product. So multiply this product, 2000 into 12, 24,000 and 22,000 and 20,000, 18,000 and 16,000, 14,000 and 12,000, 10,000, 8,000, 8,000, 6,000, 4,000 and 2,000. You have to sum up the product value. The summation of this one, okay, the summation of this one is 1,56,000. 1,56,000. Now I am going to calculate the interest for this sum. 1,56,000 multiplied by 12% rate of interest. As it's a product method converted into month, we have to calculate interest for a month into 1 by 12. So the final answer is 1,560. Remember there, the 2000 is constant, only this value is different. In that case, what we can do is take the 2000 as it is, take the summation of this one. Take the summation of this one. 12 plus 11 plus 10 plus 9 plus 8 plus 7 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1. This is the summation. The summation is nothing but 12 into n plus 1. So n being 12. N into n plus 1 formula can be used here. N into n plus 1 by 2. That formula I am going to use here by 2. So n being 12. So 12 plus 1 divided by 2. Okay. So the final answer is, okay, 13 into 2. The final answer is 13 into 6. Okay. The answer is 78. So this is 78. If you multiply these two, you will be getting this answer. So simple, right? So simple, right? So that's how we do now, rather than calculating with a lengthy process. I am going to simplify the calculations here by doing the simplification process. So under this model, what happens now? 2,000 rupees, 2,000 rupees, right? 2,000 rupees into 78. 78. This is what about the summation of the value. Don't forget to multiply with the rate of interest into 12%. Sum of the product, sum of the products is nothing but this one, right? Sum of the product is nothing but this one. And this is rate of interest. Rate of interest, I use it small I, rate of interest. And of course, we have converted that into the month basis. We have to calculate interest for a month. So for converting that into the month, you have to divide this by 12. You have to divide this by 12. This is a simple process. 78 by 12. 78 by 12 is 6.5. That's how you can easily keep this number in your mind. 6.5, you can easily keep that in your mind. It means now the formula is simplified. Monthly drawings multiplied with the rate of interest multiplied with the standard number 6.5. We have calculated the 6.5. You can keep that 6.5 in your mind easily. So here what happens? 2000 into 6.5 into 12%. You get the same answer, 1,560. We got this answer. I hope so you could understand. So you no need to go for calculating so lengthy. If the drawings regularly happening every month beginning, then the calculation is very simple. This is how we can do. So this is what about interest calculation, where the drawing happens every month beginning, every month beginning or beginning of every month. Okay, every month beginning. Clear? Monthly drawings into rate of interest. Monthly drawings into rate of interest, and there is a standard number. That number is 6.5. Monthly drawing, don't multiply with the 2,000 rupees and 12. The overall drawing should not be taken because the overall drawings was already adjusted here. The 78 itself adjusted one, so you don't bother about. So we have calculated for A. Now I am going to calculate for B. B draws every month end. This is what about the case of A. Now I am going to calculate for B, 1560. And in the case of B, he draws every month end, not 1/4. This is 34, 31, 5, like this. The last one will be 31. From this date to this date, it's not 12, it is 11. And here the last one is not 1, it's 0. Now what you have to do? 2000 should be multiplied with the summation of this number. The summation of 11 up to 11, right? 1, 2, 3 up to 11. Again you can use the formula. What is that? 11 into 12 by 2, n into n plus 1, 66. So the value will be 2000 into 66 by 12. Okay, 66 by 12 is nothing but what? 5.5. That's how you can name it into rate of interest. This is how you can calculate. So if you are drawing every month end, right? Formula is the same rather than every month beginning. If it is in every month end, the answer will be the monthly drawings, I missed that, monthly drawings multiplied with the rate of interest, that static number 6.5. You can memorize this 6.5. I told you how to arrive at 6.5 also here. Similarly for the every month end, the monthly drawings multiplied with rate of interest into 5.5. Very simple. That how? It's not total drawings, it's a monthly drawings. And in the case of C, the drawings is anywhere between these two. Okay. So he draws every month middle. Every month middle means it is not 10, 30, it is 15 and ends here 15. The first one carries 11.5 and last month it carries only half of this. It means it's anywhere between these two. It's not 6.5, 5.5. You can of course easily guess means average of these two. So every month middle. The way of calculating for this is very simple. Monthly drawings multiplied with the rate of interest into 6 is the final one. Simply you can go for calculating that way. So 2000 into what's the value? 6. 6.5 for the year monthly beginning, 5.5 for the monthly end, and 6 will be the for the drawings at the middle of every month. So 6 into rate of interest 12%. Okay, rate of interest being 12%. 2000 rupees into 6 into 12%. So 12 into 6 into 20. The answer is 1440. Here for the B, 2000 into 5.5 into 12%. 1320. Okay. Otherwise the summation of these two and take the average of this, the average of these two, you will get the answer here. I hope so you could now understand. If the drawing happens, equal amount of drawing happens every month beginning, then the formula is simple. Monthly drawings multiplied with the rate of interest. Don't forget to multiply with 6.5, a constant number. How the constant number 6.5 arrived is also worked out here. And if the drawings happens every month end, then definitely it should not be 12 in the beginning. 12 rather than 12, it's 11 in the beginning and ends with 0. Summation of this value, we had this, and by Jugaad work we got the value being 5.5. Anywhere between these two is this 6 is for the middle. That's how you can simply memorize this formula for the regular drawings and interest calculations on it. Okay.